Hello and welcome to this Payments Association interview. APP Fraud Uncovered, How to Stop the Scam Surge. Now, I'm Benjamin David, Head of Intelligence at the Payments Association. Now, I'm delighted to be joined today by Dal Sahota, Global Director for Trusted Payments at LSEG Risk Intelligence. Dal, thank you very much for joining me today.
Thanks very much for having me, Benjamin.
So to start us off, how serious is the threat from APP fraud today, and both here in the UK and Europe and maybe globally?
So I think it is of high significance and the threat is very, very high. And to bring that into context, looking at the UK market in terms of APP fraud, £460 million worth of losses associated to authorised push payment fraud. That gives you a glimpse of the context around it. Globally, we're projecting around $331 billion worth of losses across the globe. In Europe, it's around 1 to 1.2 billion euros. Again, these numbers are of high significance. To layer in some additional significance, because these are just principally around financial losses. There is non-financial losses. There is losses that don't get recorded. And those, for me, are of higher significance. And these are at the emotional level. So individuals, be it consumers, people like you and me, our friends, family, our loved ones, becoming victims to authorised push payment fraud. That creates a significance of emotional turmoil, which can't be measured. But that is of significance because these are people's lives that have been affected day in, day out. And there is a time box element around how long that effect goes on for. And equally, it doesn't get measured in the context of the numbers that are reported. And then at the business level, you think about small to medium-sized enterprises, that are looking to grow. They've got great ambitions to aid businesses, to aid consumers like ourselves. A loss of around $1 million to $100,000 creates significance for these businesses. It can really hamper their ability to grow, to create products and services that are going to help consumers like you and me, our family, loved ones, etc. So there's a great level of significance there. I think the added element of significance is if you look at the scammers and who they're targeting. These are around 4 million bank accounts globally that exist across the world. So if you look at it in terms of the scammers and the ocean that they're really going after and the significance around that, it's about 4 billion accounts. And that middle aspect is significant, the emotional turmoil, what stress, anxiety causes on people across the globe. And that is of unprecedented significance in the marketplace.
Wow, incredible. So I suppose one of the common entry points, of course, is phishing. And I'm wondering, why is phishing still so effective in enabling APP scams? And how does it link to the sharp rise that we are seeing in fraud cases?
So one of the areas around authorised push payment fraud and why is it so difficult, I would say, in terms of capturing, is fundamentally it is the business or the consumer that is authorising the transaction, which is very different to other types of fraud. So, for example, if my account was to be taken over or my device was to be taken over, it's not me that's authorising the transaction. Hence, it becomes very difficult for our banks to fundamentally to capture that aspect of fraud, whether that's through systems, rules, or whatever that mechanism is. It's very difficult to capture because of the nature in which the transaction is being authorised. Principally, the business or the consumer believes they are paying a legitimate person for a legitimate product or service that they are consuming. So I think the aspect of that really sets around the emotional aspect to scammers going after victims, both at the consumer side and at the business side. So let me start with the consumer side. So really what they're looking to achieve is play on that emotion. So, for example, romance scams are on the rise and have been for some time. And that's playing into the emotion of somebody wanting to find a partner, because there's effectively, an element of trust when you're looking for partnership. You're looking for, a loved one in any capacity or form, to address principally maybe loneliness. They really play on that emotion. So that's one end of the scale in terms of romance scams. The other aspect of scams and the phishing scams orientate around the emotion of fear of missing out. So the fear of missing out on an investment, which is looking to double your wealth. And that emotion that they're looking to play on is prey on the vulnerable, play on those people that their path to wealth is maybe not as easy or as accessible as it is for many, many others. So they're really preying on that sort of emotion of fear of missing out on that opportunity. So all these emotional aspects at the consumer level, they're really playing out to the APP fraud scammers out there. At the business level, it's really around the sense of urgency. You are due to make a payment to me as your vendor into your business. Your payment is late, it's overdue. Please, can you pay to this bank account? So it's all built around these emotions. So whether it's the element of trust, well, it's the element of fear of missing out, it's all, and sense of urgency, it all plays out to that effect. The second part of your question, many of our lives at a consumer and business level are very digital. If you think about how we used to pay historically, it's very different the way we pay today. Sure. So very much driven by digital channels. The engagement that we have consumer to consumer, friend to friend, or business to business tends to be more digital than ever before. And I think that proliferation of the way that the scammers can access technology to enable this at scale, is a real catalyst that's occurred in the marketplace. So many of the technologies that they are using, they're accessible open source. So I think this combination together makes it very effective for the scammers out there in the market.
Great, thank you. So let's move to cross-border dynamics. So instant and cross-border payments, as we know, they bring speed and efficiency, but they also create opportunities for criminals. Now, from your perspective, what makes these payment channels particularly attractive to fraudsters?
So I think the sense of speed is absolutely one. Yeah. So, the way that money moves today, domestically, there's many faster payment schemes around the world, and they're growing from a cross-border nature. So that really aids in the way they can take money quickly from a consumer or a business to get it into principally their bank account. And from there, they can push that money out very, very quickly. So the speed at which the payment goes is very, very effective and of need to the marketplace. But for fraudsters, it's super attractive also because the money can come in quickly and it can disappear very, very quickly. And if you look at the added layers of cross-border, you think money moving domestically is getting faster. If it goes cross-border, then you're ultimately into another country. What does that mean, and why does that play in the hands of fraudsters? Then actually not only have the money left the country, but it's less jurisdictional boundaries from a legal and regulatory perspective. And that aspect brings both complexity that favours fraudsters. So trying to get that money back under that complexity is not easy, and in some cases non-existent. And then that added aspect to, pushing that money out to other monetary schemes or monetary points of value. So taking money into a bank account and then flipping it to a digital wallet or flipping it into, let's say, the crypto market or anything of that nature, it's all done at speed. And the complexity that goes with it really plays in the hands of fraudsters.
Oh, it's incredible, isn't it? So I'm going to have to talk about AI, of course, and the AI factor. Now, artificial intelligence, of course, is often described as a multiplier force for scammers. Now, what are some of the most concerning developments that you are observing in terms of how AI is being exploited for fraud?
Yeah, I would say there's publicised cases where a CEO or a CFO has been defrauded by a scammer, and that's in the context of that vendor scam that I was referring to. So all of that aspect to that scam is on video, a video conference call. As I mentioned, many of our lives have turned digital, so a lot of our interactions are driven by essentially video conference calls, ease of accessibility. But that scam, it's not the scammer, him or herself, is not a real person. It's a deep fake that's been constructed by AI technology. The reality of what the look and feel of that looks like, it looks super, super real.
Yeah.
And that, again, just plays out in effect. So even this conversation that we are having today could be done by AI technology. And that open source element to AI, as it stands in the marketplace, just plays in the hands of the fraudsters that are out there.
It's a very real conversation, I promise. So let's talk about the fight back. I think that will be an interesting one. So clearly, this is not a challenge that can be solved by one actor alone, of course. Now, how do you see the regulation, technology, such as real-time account verification and industry collaboration coming together to turn the tide against APP fraud?
So I think it is going to require a multi-dimensional response to the significance of authorised push payment fraud. So in terms of regulation, I think that creates a very obligation effect in the market. It's a must-have, not a nice-to-have. So we've seen that in the UK play out last year with the payment systems regulator ensuring that banks and money movement companies, payment service providers have bank account verification at the point of when their customers initiate a payment. So I know we have that sort of user experience for many years now, around 5 years, but it's now enforceable from a regulatory point of view as of October last year. EU's coming to that effect October of this year. And then the Financial Action Task Force, which is a global standard setting body across the G20. They've just recently updated Recommendation 16, which is around payment transparency, which includes and advocates for the need of verifying who you pay before you pay through schemes like the confirmation of payee or verification of pay. So I think at a regulatory framework, we're starting to see a really strong response to the market. And I think legislation-wise will play out to the effect of that recommendation. So UK, Europe sort of leading the way. US and APAC, I'm sure, will be catching up in terms of that regulation becoming enforceable. So I think that's a key cornerstone for the purposes of addressing the problem at hand. I think from a technology point of view, if the fraudsters are using it in larger scale, whether that's AI or other automated ways to scale, the market response has got to scale in that effect as well. I think there's an underlying aspect to the technology, whether it's AI or other forms, and that is essentially data. So having the right data at the right place at the right time associated to the characteristics of this type of fraud that's happening in the market and being able to share that across the market within the with the confines of data privacy laws that do exist, that is going to be a real game changer in my view. And work that we've been doing at Risk Intelligence within the London Stock Exchange Group, the research that we're doing really centres on that. So in terms of our sort of future product development, it's going to be a cornerstone to that future product development. We're responding to the market in a collaborative way. So in my position at the Risk Intelligence division of London Stock Exchange Group, I get great privilege and access to many regulatory bodies, businesses and customers across the globe. And therefore, we're always having a level of continuous learning, myself and team, and we're ingesting this in a collaborative way. And it's an important aspect to the response. It's got to be collaborative in nature, the spirit of your question. So we're seeing many bodies across the globe working together around this aspect. And I wouldn't single out any particular organisation globally at a regulatory level or an association level, but I'm hearing it across the globe. More recently, I was in Singapore engaging with market participants there, and there's a regulatory response, there's an association response, and it's done in a collaborative fashion with many market participants, either sitting on the public sector side or the private sector side, and it's really those two sort of sectors really coming together, and that's the way we're going to really get in front of the problem. I think we're a little bit behind, but we are, making strides across the market to really get in front of that problem.
So yeah, clearly a multi-pronged approach that no single actor can lead. So that brings us to the end of today's discussion. Dal, thank you much for joining me today and for your invaluable insights. And thank you for watching, and for more insights from the Payments Association, please visit our website.